Variable or fixed rate, that seems to be the hot topic of discussion in today's market. And yes, the variable rate is slightly lower than the fixed rate. So of course, that could be the reason why it is a hot topic. But the real question that you need to ask yourself is, what is your risk appetite? What's your risk appetite? Once you find out what your risk appetite is, then of course, you'll be able to make a clear decision whether it be the fixed or the variable rate. Welcome once again to Eye on Mortgage. Stay tuned and we're going to break it down a little bit more with regards to some things that you need to know so that you can make a clear decision as to what direction you want to go in, fixed or variable. Welcome to Eye on Mortgage, where we keep you updated on what's happening in the mortgage industry and what you need to know about the mortgage process. Are you a first-time home buyer? Looking to refinance? Interested in a private mortgage? Perhaps you want to know more about purchasing a new build or the reverse mortgage product. Whatever your interest, stay tuned to Eye on Mortgage. Oh, and please take a moment to like, share, and so let's break it down, all right? Let's start off with the fixed rate. With the fixed rate, what you're buying into is stability, of course, all right? You're buying into stability. You're also, of course, buying into the fact that you're going to be having predictable payments. And that is a plus because every month, you know exactly what your monthly mortgage payment is going to be. What is the payments? You want to know that, and it makes it a lot more stress-free because with the fixed rate, you know exactly what that payment is going to be, of course. There is, of course, the protection as well, protection from potential rate hikes. Of course, if you're in the variable rate, there is a possibility that the rate can increase and it can decrease as well. It could go either way. But with the fixed rate, there's that protection in case the fixed rate in case the variable rate is to go up, all right, with a fixed rate, you don't have to worry about that. Your payments won't be increased. So basically, you're paying a premium for peace of mind. Let's put it that way, all right? You're paying a premium, paying a little bit more for peace of mind. The variable rate, on the other hand, all right, what you're betting on is a low interest rate. You're obviously entering in with a low interest rate. You are hoping that rates are going to go down. That is the intention. You're hoping that the variable rate will continue to go down. Historically, the variable rate has been quite low in other markets, and individuals had a great opportunity to pay a lot of principal down based on that, paying less interest and more principal. So really cutting that mortgage balance down very quickly. Right. So when it comes to the variable rate, you are betting on the possibility, of course, great possibility that rates will go down. Flexibility as well. That's another thing with the variable rate. There's that flexibility that if you need to break the mortgage, then the penalty won't be as hefty as if you're in a fixed rate, depending on where you are in that fixed rate. If you're a few years in, if your fixed rate is 5 years and you're 1 year in, 2 year in, and you need to break that term, the penalty can be quite hefty versus if you have a variable rate. All right. So with the variable rate, essentially, you are taking a risk on the potential of, savings, potential of getting some great savings through that variable rate, because yes, it is a product that can offer some great things, but you have to have the risk appetite and you have to understand it. So the Bank of Canada has their meetings I think it's about maybe 9 times a year. And every time they have a meeting, it's either they're going to increase the rate, decrease the rate, or leave the rate as is. It's very important if you are in a variable rate to, make sure you kind of follow that and understand, when the Bank of Canada is having their meetings. Keep in mind that those meetings do not affect the fixed rate. I've had clients who have a fixed rate and they're asking, does this mean my payments are going to go down, or does this mean my payments are going to go up? The fixed rate is governed by the bond yield. All right. So if you're in a fixed rate and Bank of Canada had their meetings, that is not something that's going to necessarily affect you. All right. That affects the variable rate. And so, once again, it's very important, to understand if the Bank of Canada, if you're in a variable rate, Bank of Canada has a few meetings. All right. And you're starting to see a trend where, rates might have increased the last 2 or 3 meetings. You actually have the option to convert to a fixed rate. So do keep that in mind. If you start to feel unsettled, you went into a variable rate and you're, this is looks like the rates are starting to increase on us here. So, contact your bank and make arrangements to convert to a fixed rate. So you definitely have that option. So that's something that you need to understand. You need to know, right, what your options are when it comes to a variable rate. So the sweet spot right now is the 3-year fixed rate term. All right. It definitely locks in stability. And that's what a lot of individuals like. If you're not, if you don't have that risk appetite and you don't want to be in a situation where your interest rate is increasing and you're having to pay a higher monthly mortgage payment, then of course the fixed rate is the go-to at this time, is the better option. This is what a lot of experts are recommending right now. But, we obviously want to make sure that we balance it out, all right? Because, of course, the fixed rate interest rate, it definitely has come down, and we would like it to come down a little bit lower, but we don't know what the future holds. So the sweet spot is that 3-year term, so that in the event that rates do come down, it gives you that flexibility where you can come out of that mortgage at the end of the term and take advantage, of course, of the lower rates sooner rather than later. So when does variable rate make sense? All right. So I would recommend a variable rate if you have strong income. This way, if payments are to increase, you're able to still manage those payments. Also, if you are comfortable with payment fluctuation, of course, the variable rate can potentially make sense for you. You have to understand as well, with the variable rate, it's really, it's a strategy play. It's not a comfort play. Okay, it's a strategy because you are looking to capitalize off of the lower rate. So with a variable rate, you are anticipating and hoping that the rate is going to go down. We definitely had that market, as I mentioned, that where the rates were significantly low and individuals were able to pay off a lot of their principal. So that's the anticipation. And, you are obviously understanding that there is the possibility of the rate increase, but with strong income, you would be able to sustain that, or at least you should be able to sustain that. And so, if that is the case, of course, I would definitely recommend a variable rate. Of course, with your risk appetite, okay? You may have a strong income and all these things that I've just mentioned, but you don't have a risk appetite. You don't feel comfortable still. And if you don't have that peace of mind worrying every month, then, then it's probably best that you stick with a fixed rate. So when does the fixed rate make sense? All right, so the fixed rate makes sense if you have a tight budget. If you have a tight budget, of course, you don't have any room for rate increases or mortgage, which will obviously trickle down to the monthly mortgage payment. So you don't have any room for a mortgage increase at all, for the monthly payments increasing on you. If you're a first-time home buyer, I would definitely recommend the fixed rate as well. It's more stable. Payments are predictable, and of course, it's your first time kind of getting into a home. Just want to make sure that you're managing things to the best of your ability. And once you kind of get your feet grounded, then maybe, later on when that term comes to an end, you can take a look or explore the variable rate. Okay. And, these are definitely things that you 100% want to consider if you are taking a look at, both options, the variable versus the fixed rate. Of course, if you don't have a risk appetite, then the variable rate is 100%. It's not for you. Okay. You want to make sure that you have peace of mind. You don't want, every Bank of Canada meeting or every day you're worrying and wondering, what is this rate going to be? And so the variable rate would definitely not be the best choice for you, where the fixed rate would be the best choice, because it's giving you that stability. You know exactly what that monthly payment is going to be. So, once again, if you're a first-time home buyer, if your budget is very tight, you don't have any flexibility really, then the variable rate, the fixed rate, of course, would be the best option for you. So it's really not just about getting the lowest rate today. It's really about choosing the best structure that's going to protect you over the next few years. Okay, so you want to make sure that you're in your home, you're enjoying your home, and you're not in your home and just stressed based on the type of mortgage that you chose. So make the right choices. Really take a look at the options. Really take a look and understand what your risk appetite is, And I do believe that from there, you'll be able to make a decision that's going to, of course, be manageable over the next couple years while you're in that particular mortgage term. If you have any questions, please feel free to reach out. I'm more than happy to assist. I'm more than happy to clarify a little bit further if there's anything that you don't quite understand. But at the end of the day, I do believe that, having the knowledge is very important in making the right decisions when it comes to your mortgage process.